On behalf of the Federal Reserve System, good afternoon and thank you for joining us. I'm Dave Saponaro, First Vice President and Chief Operating Officer of the Federal Reserve Bank of St. Louis. It's been my honor the past 2 years to lead the Federal Reserve's executive team in developing strategies for improving the end-to-end speed, safety, and efficiency of payments. We were pleased earlier this week to release our paper, Strategies for Improving the U.S. Payment System, which is a joint effort of the Federal Reserve Banks and the Board of Governors, and the culmination of a tremendous effort within and outside the Fed to chart a course for the payment system of the future. Joining me to discuss these strategies today are Federal Reserve Governor Jay Powell and Esther George, President and CEO of the Federal Reserve Bank of Kansas City. Jay took office as a member of the Federal Reserve Board of Governors in May 2012. Earlier in his career, he served as both an Assistant Secretary and as Undersecretary of the U.S. Treasury. Jay will co-chair a newly established executive oversight group inside the Fed, the Federal Reserve Payments Improvement Oversight Committee, with responsibility for overseeing implementation of the paper strategies. Esther has been president of the Kansas City Fed since 2011 and has more than 30 years of experience at the Federal Reserve. She will serve as executive sponsor responsible for leading implementation of the paper strategies on behalf of the Federal Reserve System. Jay and Esther will each take a few moments today to share their thoughts on this important initiative, and then we will address several of the questions we received from you over the past few days. With that, it is my pleasure to introduce Jay Powell.
Thanks, Dave, and good afternoon to those of you out there who've joined us. Esther, Dave, and I truly appreciate the opportunity to talk about the evolving payment system and our vision for the future of payments in the United States. And by our vision, I speak of an industry vision that has taken shape over the past year, as we heard from thousands of stakeholders on the greatest pain points and the opportunities facing us. Earlier this week, the Federal Reserve Banks and the Board of Governors jointly released a paper entitled Strategies for Improving the U.S. Payment System, a plan for working with you to pursue these opportunities to modernize the U.S. payment system in the coming years. The paper's desired outcomes and strategies for achieving those outcomes represent what we believe to be common ground and the common good. These strategies describe opportunities and solutions that have the broad support of end users and industry stakeholders and will contribute to long-term public confidence and economic growth. As the United States Central Bank, we see the desired outcomes as policy objectives and seek to facilitate industry achievement of them. As we look to the future, we envision faster payments, capabilities for moving money in near real time that are safe and available to every American consumer and business. And underpinning this real-time retail payments capability, we see an infrastructure that supports rapid and final interbank settlement. While there is diversity of thought on how to achieve these capabilities, there is broad agreement on the need to do so. We also envision a secure payment system that enjoys unfaltering public confidence. The driving force behind this security will be a proactive and nimble payments ecosystem that effectively responds to the rapidly evolving threat environment. The payments industry is hard at work on many securities issues today, and in our conversations over this past year, showed a strong commitment to further collaboration. The integrity of the payment system is above debate. The faster and safer payments described by the first two desired outcomes will be enabled by continued payment system efficiency gains. More than half of all payments in the United States today continue to be initiated with paper instruments at great and unnecessary societal cost. A future with better electronic payments can provide businesses and consumers with the incentive to turn 18 billion checks a year into electronic payments. We envision these electronic payments flowing seamlessly from origination to receipt through systems that work well together. We also envision this faster, safer, more efficient payment system not just for the payments we make at the corner store or to the babysitter, but also for those that need to go long distances. Global commerce and travel will continue to grow, and it's imperative that Americans can easily send and receive cross-border payments in a timely and cost-effective manner. This is an ambitious vision for the future, given the myriad challenges inherent in each of these goals. It's far too ambitious to be achieved by the Federal Reserve alone. We know that success depends on a high level of industry cooperation and a collective commitment to these outcomes. There is significant common ground and momentum upon which to build, and the Federal Reserve stands ready to serve as a catalyst for collaboration. We invite you to join with us to seize this opportunity and to join with President Esther George, who will lead these efforts on behalf of the Federal Reserve System. Esther is here today to describe our plans for beginning this journey with you. Esther.
Thank you, Jay. I appreciate you describing what we hope to achieve for the future of the U.S. payment system. I'd like to spend a few minutes discussing how we plan to reach these desired outcomes. Since the Federal Reserve's founding, Congress has looked to the central bank to lead efforts to foster the innovation, efficiency, and safety of the payment system. We have a strong history of partnering with the private sector to achieve success in pursuit of this mission. We've built on this history with the paper that was released earlier this week. It's the result of extensive collaboration with a range of interested parties, and it aims to provide a blueprint for meeting the needs of an evolving payment system. First, the paper confirms the Federal Reserve's commitment to an open and collaborative approach to these issues. Throughout the past year, we've witnessed overwhelming interest from the payments industry and consumers in this work. And we've heard from many who said they didn't feel they had a voice in how the payment system evolves. So in the months ahead, the Federal Reserve will seek an even greater level of involvement and input as we work together to improve the payment system. The Federal Reserve will establish 2 task forces to advance the paper's strategies. These groups will be led by the Federal Reserve and comprised of payment system providers and participants. One task force will lay the groundwork for developing faster payment capabilities for the United States and to identify solutions for a broadly accessible faster payment system, which could involve creating new systems or enhancing existing infrastructure. A second task force will focus on payment security, with diverse stakeholder representation, and will advise the Federal Reserve on security issues and help us identify priorities that require action. We remain committed to security standards development and adoption, and will leverage the Federal Reserve's research capabilities to better inform fraud prevention, risk management, and policymaking efforts. The Federal Reserve also seeks to improve the efficiency of the payment system. Together, we must work to develop, refine, simplify, and adopt standards that will open the door to end-to-end automated processing. In addition, our electronic payment systems across the industry must speak the same language and make it easier for individuals and businesses to pay one another. To this end, we'll work to support education about the benefits of electronic payments versus paper instruments. With nearly 28 million small businesses in the United States, this coordinated education campaign will require the efforts of the entire payments industry. We're fortunate, however, that this work isn't just starting from scratch, and we can leverage existing industry efforts to increase the efficiency of business-to-business payments. Finally, the paper outlines in detail improvements that the Federal Reserve itself will pursue in its role as an operator of ACH, funds transfer, and check clearing networks and provider of settlement services. The strategies I've outlined represent a significant undertaking that can only be accomplished with the commitment of a broad and diverse range of participants throughout the U.S. payment system. In the coming weeks and months, there will be more information about opportunities to engage in this effort. I want to thank Dave Saponaro for his willingness to extend his work on this initiative through this transition phase as we assemble the leadership team that will carry this work forward. So let me close by reiterating Governor Powell's invitation to you to join us to build the payment system of the future. Our collective efforts to deliver faster, safer, and more efficient payments will create new opportunities and better serve Americans. Jay, Dave, I, and the entire Federal Reserve look forward to getting started. So let's begin with your questions.
Jay, Esther, thanks for the comments. And we did receive a lot of questions, so let's dive right in. Jay, I'm going to throw the first one at you. It comes from Jim, a senior executive of a bank holding company, and it's related to the Fed's role in these improvements. And he notes in his question, the paper states that the Federal Reserve would not consider expanding its service provider role unless it determines that doing so is necessary to bring about significant improvement to the payment system, and the actions of the private sector alone will likely not achieve the desired outcomes for speed, efficiency, and safety in a timely manner. So here's this question. Has there been a payments initiative in the past where the Fed has not been an operator and served as a leader catalyst with the private sector to bring about change in the payments arena?
So Jim, thank you for your question, and the sense of it is, I think, exactly right. Our history as in prior payment system improvement efforts in collaboration with the private sector has been around our role as an operator for ACH, for wire transfer, for checks. And that's a natural place for us to have been working. This effort is different and a little broader and a little more ambitious. So what we're trying to do here is drive significant improvements in the speed, efficiency, and safety of the U.S. payment system, and do that in collaboration with a broad group of industry payment stakeholders. So yes, that is more ambitious, that is challenging. Success is not assured, but we've been working for 2 years with stakeholders across the payment system, and we've heard quite a lot of support. But yes, we're looking for improvements in areas that are not directly connected to our role as an operator. And we believe we can achieve success without increasing our role as operator. Jim, you also mentioned the test that we apply to ourselves in expanding our role and in offering new services. And all three aspects of that test must be satisfied. It's been on the books for us for more than 3 decades. First, we have to believe that we're going to recover all of our costs. Secondly, we've got to believe there's a significant public benefit in the form of greater efficiency, greater security, integrity, that kind of thing. And third, we have to believe that no other operator can provide those benefits with the same effectiveness, scope, and equity that we can. And those are important requirements that are consistent with the law that we operate under, because there's a lot of innovation going out there in the private sector. And private sector companies are better set up to innovate and to make quick decisions about developments in the market than any government agency is. And we don't want to unnecessarily broaden our role and thereby unintentionally get in the way of that kind of innovation. So those are important requirements. That said, as I mentioned, we think we can complete this project successfully without necessarily increasing our role. If the 3 tests that I laid out are met, then that's something we would have to look at. So good question.
Great. Thank you, Jay. I'm going to ask Esther to answer the second question. It comes from Rob, the president of a payments technology firm, and he asks, what is the plan for improving or creating solid security for electronic payments?
Security has probably been an issue that we've grappled with for some time, as has the industry, because with the innovation that we've seen in the payment system has also come new risk. And those have been key as we thought about this effort with the strategies paper. So core to what we plan to do is to convene this task force. And we want there to be a broad set of views that come from experts around the country that can advise us on the nature of these security matters, that can coordinate with those that will be thinking about what are the solutions to faster payments to make sure that even as they are faster, they are also safe as we go forward. And then I think as we collect these issues of what are the nature of the security issues we face to help us prioritize. So we'll need to think about where should our focus be so that we can make progress on what those are. For the Federal Reserve itself, this is an ongoing issue and something we think about with our own systems, and we will continue to do that as we go forward, thinking about the challenges around data breaches, identity theft, and other things. So.
You know, it's interesting, the reaction to our paper this week has mostly been centered on our faster payment strategy, understandably so, but I think we want to ensure, and inside the Fed, we're giving just as much energy and enthusiasm on our payment security strategy as our faster payment strategy, because they're both extremely important.
Yeah, the public's confidence is really
Right.
what's at stake here.
So Esther, I'll keep the floor with you because we have another question related to safety and security, and it comes from Brian, a director of alternative payments company, and he asks, couldn't a payment mechanism with anonymity of payers and payees as a feature better protect individual privacy and eliminate data breaches and identity theft?
So again, in the vein of the issues we face with security, I think the ones that have dealt with individuals, so whether those have been data breaches or identity theft issues, we know those are the ones that have the potential to unsettle the public and raise a lot of questions about the systems that they use. Can they take advantage of the convenience and yet have confidence that their information is going to be protected? I think as we listen to the industry comments in this space, there was a fair amount of support that solutions that would mask identities would be promising. And so again, as we convene this task force to look at payment security issues, those will be the kinds of things that we'll want to coalesce around on where we see the best opportunities there.
So Jay, I'll ask you to take the next question, which comes from Art, the managing director of a research firm. And Art asks, does the Fed think the NACHA same-day ACH plan and the clearinghouse real-time payments plan are good ideas?
So first, it's a great thing, better than a good thing, that both NACHA and the clearinghouse are actively working in this area, which really relates to the first of the two task forces that Esther mentioned, the faster payments task force. We welcome them. We welcome their plans. We welcome their ideas. And more specifically, in the case of the clearinghouse, we look forward to seeing more details. They've come out in favor of a faster payment system, and that's great. In the case of NACHA, they've actually got a proposal on the table for same-day ACH, which they issued in December, seeking comment. We're looking at it very closely right now, and we'll be offering comments which we'll share with the public in the reasonably near term. So again, very welcome to have many parties working in this area. In terms of our own faster payments task force, what we're really trying to do is, as I mentioned earlier, is to convene payment system stakeholders and try to achieve faster, safer, and more efficient payment system. And we're going to be looking at the best approaches, the best designs, and we really hope to have everyone at the table to bring their best thinking on that so we can arrive at the best answer. And we certainly hope that the clearinghouse and NACHA would be represented in those efforts.
Okay, great. Esther, I'm going to lob the next question to you, and it comes from John, who's the editor of a trade publication, and he's throwing us a high and tight fastball here. He said, some folks have expressed disappointment that the Fed seems to be moving too slowly on the faster payment initiative, given what they see as a pressing need in the U.S. market and progress already made overseas. So how should we respond to that criticism?
Well, I think it's a fair observation in terms of gauging where the U.S. is relative to some other countries, and relative to what I think we heard as we worked with participants in the industry about their own desires. So I would agree that we come to this with a sense of urgency to begin to make progress and move forward on that issue. At the same time, in an economy the size of the United States, and given the multiplicity of players that participate in that payment system, I think it's important that we approach this to try to get as much consensus and to try to assure that we have taken into account a broad range of interest as we undertake this effort. And I think in doing that, while that may take more time to build that consensus, I think it will serve us well in the long run. And that has been sort of the history in this country. So we will do our best to keep that urgency in front of us, even as we continue to be thoughtful about how to bring those interests together.
Sure. I would just throw out, from my perspective, the Fed has limited authority to mandate various payment system changes, and one of our best tools is our ability to convene people, try to help lead to effective private sector outcomes, and I think the paper, is very much in support of that view. So that's what we're trying to do with
No,
our
I think
faster
so.
payments.
And I think as we've taken in the observations and the input, there is a lot of innovation out there. This is not the kind of effort that really demands someone to come forward and hand the solution there, as it is to bring together the thinking that's already underway. And so that will be our task ahead.
So Esther, I'm going to ask you to answer the next question. It comes from Norman, who represents a nonprofit standards organization. And he asks if the Fed plans to engage with standards organizations around the globe who are working on the ISO 20022 standards implementation.
Yeah, that's a good question. So the Federal Reserve has for some time engaged with standard setting organizations, and we will continue to do that both domestically and internationally. And so we'll continue to partner here with NACHA, with the Clearinghouse, with X9 and others on the efforts they have underway. And importantly, as a component of these strategies, is looking internationally. So SWIFT and other international associations that are involved in the standard setting process, we will continue that partnership, and that will be an important aspect of this effort.
So this is a very interesting question from Jim, who is an investor in a payment services company, and it's kind of on the other end of the spectrum in terms of, we've been talking a lot about the future and faster payments and, new systems or modified systems. He asked the question more about our current legacy systems, and his question is, he's wondering about where electronic checks and other legacy payment mechanisms fit into the Fed's plans and into our strategies.
Yeah, that's a good question, Jim. And of course, as an operator of one of those legacy systems, this was an issue that came up as we convened industry participants and asked for feedback on their views about the future of check payments and other legacy systems. And I think the sense is those continue to be used. It may not be a priority as far as future investment as we think about how faster payments work, but there also was not a sense that we needed to set a sunset date per se. So I think you will continue to see those systems evolve relative to other options that are out there in the payment system. And indeed, for the Federal Reserve itself, as an operator, we'll continue to make what the necessary enhancements are to our own systems to make sure that they are functional and move in the direction of supporting the payment system.
So Jay, the next question I'm going to ask you to take, and actually it's a culmination of a number of questions we received from our audience related to our perspective on cryptocurrencies and related technologies and whether or how they might be part of any future payment system that we envision.
Great. So I'll take that broadly and then bring it down to this initiative. So it's probably worth saying at the beginning that to the extent virtual currencies exist outside the banking system, we have no regulatory authority over them. Our regulatory authority is really around to the extent they go through regulated institutions. So, but more specifically, the Fed has taken, I think, a balanced view of these innovations. In particular, it's clear that virtual currencies can offer speed and they can offer lower fees. And so we've not been just against them in a thoughtless kind of a way at all. We've tried to say that there are those benefits. There also have been risks. Anonymity can be, which Esther mentioned earlier, can be a two-edged sword, and so it may be all payment systems are subject to abuse by, money laundering and things like that. But it may be that a fully anonymous virtual currency outside the rest of the payment system would be more so. In any case, so we've looked at those issues and we've looked at the state of development of the industry. And really, for the latter reason, concluded that that the virtual currencies are not at a mature enough stage to really be considered at this point as part of our initiative, as part of a faster payments initiative for the broader U.S. economy now. The levels of adoption are simply not that high. They're not growing that fast. There are these questions, but those are really the point is that the industry is really nascent. Mm-hmm. And while it may play a bigger role in the longer term, it's not really ready to play a role at this point. So we see it as essentially outside the scope of this initiative.
Yeah, and what we noted in the paper, because we did, as part of our thinking and planning efforts, we certainly spent some time talking about this. And as we note in the paper, as we do with many payment system developments, we will continue to monitor, to assess, see how things evolve, and as things happen, we may decide to pursue a different strategy. But for now, we're really monitoring and assessing kind of developments.
And I think they also tell us something about how technology brings about innovation,
Sure.
and I think it will inform us on what capabilities exist and how we need to think about some of these issues on the systems that we settle on.
That's right. And there may be technological innovations within particular virtual currencies, which themselves become important for the broader payment system as opposed to the actual currency becoming important. So we're very mindful of that and keeping a close eye.
So Esther, I'm going to ask you to take the next question. I'm glad we received it. It hopefully indicates a strong interest. But actually, a lot of questions came in about how many members will be on these various task forces and what will be the selection criteria.
Yeah, that's a great question, and it's one I hope people will continue to stay focused on, because we are now in the process of really finalizing the details of how these groups will come together, what their composition will be, what kind of terms and disclosures come along with that, and how to register to be part of one of those. My hope is that we will get a lot of interest for these task forces, that there will be broad representation, because that is really the key to our being able to bring forward some progress, both on the faster pay side as well as on the security side. So in the next few weeks, we should have that information up on the website where we have information about this effort. And I encourage those that are engaged in these issues to help us by participating on the task forces.
Okay. So our last question for our webcast today, Esther, I'm going to ask you to take it, comes from Lawrence, an executive with a payments technology company that serves banks. And he's wondering about our desire for ubiquity, which he correctly points out that ubiquity is a recurring theme throughout the Fed's paper. Is the Federal Reserve creating a two-tier payments environments, e.g. large banks versus small banks, by relying upon the private sector alone to develop a faster payment system?
This is really core to how we've thought about this effort, and that is a payment system that is broadly accessible, has some degree of universal capability as well as accessibility. So that means as we go forward, we really have to collaborate in a way that takes in a broad range of interests. So we're going to be looking across at banks, at non-banks, at a collection of participants in this industry to make sure that we understand the issues. And I think the Federal Reserve, in its role as a leader, can think broadly with these participants about what will serve the broad interest of the U.S. payment system. So it is an important element, and it is an approach that we have embedded in these strategies to make sure that it has that kind of broad accessibility for the country as we go forward.
So Jay and Esther, thanks for your participation and willingness to do this webcast today. And thank you for joining us and for the excellent questions submitted by so many of you. If due to time constraints we were unable to address your question today, you can expect direct follow-up from us. We'd also like to take this opportunity to invite you to our Strategies Overview webinars on February 4th and 10th, where we will discuss the paper in greater detail and field additional questions. Details for the events, along with complete information on this initiative and opportunities for getting involved, are available at fedpaymentsimprovement.org. We encourage you to stay engaged and help turn this vision for the future into reality. Through our collective efforts, we can and will achieve a faster, safer, more efficient payment system for the United States. Thank you.